We're going to start today's session with a conversation with Vikas Choudhury, Managing Partner of Pivot Ventures, but Vikas also has other roles and he will tell us about it. Vikas, let's start by introducing our audience to yourself as well as to both your activities.
Great. Thanks so much for having me, Shramana. A quick background of myself. My day job is actually being part of the leadership team of today's the world's largest mobile data network, Reliance Jio. But that is not what I'm here to talk about specifically with you. I was actually one of the first angel investors in India when the VC industry started out in 2005 and have made more than 30 investments. I now have a family office investment vehicle through which we make private equity investments, typically in the pre-Series A stage, and that is what I'd like to talk about today.
Okay, fantastic. And that is under the Pivot Ventures umbrella?
Yes, absolutely.
Okay. So tell us a bit about the size of the fund, the check sizes that you like to write, and then let's talk about what kinds of investments do you like to make.
Sure. So the fund is not a classic drawn-down fund, as it is essentially family office capital that has been allocated, from my extended family, as well as some other closely associated business partners. And, we invest essentially out of our proprietary books and our existing businesses. And we typically do pre-Series A kind of investments, so it is not seed, but it is not late stage. It is somewhere in between, where there is a product in place and a customer validation in place. And we typically write about $500,000 checks into investments.
And the geographical focus is all India-focused ventures?
So largely, we have invested in businesses connected with India, either as a market or as a product/innovation hub. However, we are increasingly seeing a lot of opportunities and companies out of Singapore and USA that have India Connect, which is very exciting. We do have offices, of our operating family businesses between the US, India, and several countries in Asia. So that is sort of what we look at, but we like to have at least one India Connect in the business. Okay.
And what about sectors? Are you talking about B2B and B2C? If you're talking about one or the other, what is your preferred sector? Can you give us some color on that?
Sure. So our team's experience comes from a combination of generations of running businesses to now actively investing in other businesses over the last 2 decades. We focus essentially on our expertise areas, which is tech and consumer. And of course, those are fairly broad areas, but within tech and the consumption economy today, some of the areas that we're looking at actively are anything mobile related, commerce as a whole across the ecosystem, analytics and AI, consumer products, retail, healthcare, and fintech. These are some of the areas that we have traditionally done. We've operated business in all of these areas ourselves, and this is where we think the future of opportunities lie that we would concentrate on.
But B2B and B2C?
Yes, B2B and B2C. Often our B2B plays are B2B2C versus pure B2B, but we have done quite a few of classic SaaS companies as well.
Okay. So let's talk about some of the things you've invested in And we'll talk about Pivot Ventures investments in a moment, but I'd like to actually hear a bit about, you said you're one of the first investors, angel investors in the Indian ecosystem. Talk a little bit about what did you invest in back in 2005, and how has that landscape changed, and how has your investment evolved through that, period?
Sure. I think there is, a sea change in the landscape, from 2005 to now. Essentially, 2005 was sort of the first coming, of the entrepreneurship wave in India, as well as the venture capital ecosystem coming together across various stages of opportunity. And therefore, the opportunities you saw at that point in time were sort of first generation building foundation products and services, and the first set of products that leverage the Indian internet and mobile ecosystem, but still with a market that was not yet in critical mass, but early stages establishing proof of concept, and then scaling them as we moved along. Today it has changed significantly, but let me talk to you about a couple of investments that I did at that point in time that have augured really well. So one of my first investments was in this company called InMobi, which is now a storied company, became India's first ever unicorn, became the world's largest independent mobile ad exchange. And when we did InMobi, it actually started out very interestingly as a publisher on the local search engine that ran relevant ads from local merchants basis your search. As was prevalent at that point in time, businesses often very quickly validated an idea and pivoted into an area that had critical mass. And that's where InMobi also pivoted into being a global ad exchange versus being, a local publisher of relevant information. And, that was essentially when Kleiner came in, and sort of history was created. At that point, nobody understood mobile advertising in India, but that was a bet that we were willing to make of saying that it's going to ride several waves, right? Mobile is going to become the primary device and communication of choice, for the Indian consumer. It is then going to evolve into also data and information, being delivered and consumed on the mobile, and finally, therefore, an entire digital advertising market is going to emerge from one that did not exist at that point in time. And I'm glad to say today, almost more than 25% of Indian advertising goes into digital. So, and we've seen, of course, the world move in almost 50% trajectory in several markets. So that was one investment that worked really, really well. The other one that I bet on at that point in time was again an institution today called Myntra, which is now part of the conglomerate of Flipkart in the e-commerce space, right? Again, at that time, e-commerce, was extremely new in this country. It was the first time ever that the ecosystem was coming into place in terms of logistics for last mile delivery, payment systems for digital payments, as well as the innovation of cash on delivery that drove Indian e-commerce adoption, as well as consumers actually going out and searching, for products, curating and buying online. And we made a bet again that in a category like apparel, not just something that's customized, not something as standardized as, let's say, mobile phones, which is the largest category in India today, people will also start consuming apparel online, because there will be an ability for the product to be able to sort of talk to you, guide you through the journey, and deliver all the convenience of shopping at home. And of course, we exited Myntra to Flipkart, and now Flipkart is, has been bought over by Walmart, as everybody knows, and that's been a fantastic journey as well. So those were some of my early themes that I did, at that point in time, where we bet on large shifts in consumption behavior. that we saw across the country.
Because I have one question based on what you said. So it sounds like you are very comfortable with getting into markets that don't have a lot of traction. It's kind of future markets, which is unusual in India. What drew you into angel investing at that point, that early?
Sorry, I lost your last sentence.
I was asking what drew you into angel investing that early?
Right. Okay. Very interesting question. It was actually something that wasn't, really orchestrated. It was one of those things. I was running a software analytics company at that point in time, and there were a bunch of us, who were sort of third, fourth generation entrepreneurs that were also looking at, alternative investment opportunities in India. And we had a few common friends that came along and pitched ideas to us at that point in time, saying, "Hey, we would actually like a few of us that were in this space to mentor us and guide us as we build businesses in the tech ecosystem." And you said, what, let's sort of put our money where our mouth is. We'll mentor you, we'll guide you, but we'd also like to take, a small equity stake, in the company so that we are vested in your, success. And it sort of also, gives us return for our time investment. So it was at a point in time where angel investing wasn't even a term understood in the country. So we almost sort of were the pioneers of that. It was clearly, as I said, by a pure entrepreneurial, catalyst process, which said that let's come together and put together a few businesses, and we'll see where it goes. Because each one of us was already, even at that point, doing day jobs, as we continue to do today. But we wanted to diversify the portfolio. We wanted other entrepreneurs to benefit from the learnings that we've had, and we had the ability to open a lot of doors, whether it was strategically or whether it was financially or customer connect that we thought would be important for early stage success.
Okay, so let's come to Pivot Ventures. The team or the ethos of the kind of investing that you started with, where you were willing to look at greenfield opportunities where markets were not yet developed, does that sentiment transfer into Pivot Ventures, or are you being more, more conservative, perhaps?
Sure. So I think, we, of course, the investment vehicle has changed, the time has changed in that sense, where the economy is today. The level of, entrepreneurs and entrepreneurship has grown manifold. And, giving a look at where our expertise lies today, we're also sort of, 14 years into that ecosystem. We're seeing where the market is at. We've moved our focus, up a little bit into a pre-Series A or a Series A capital. We also, of course, invest slightly larger sums of money than we as individuals did, back then as angels. So essentially, we can write, a check which a consortium of angels will written at that point in time. And now, of course, there are also several, early stage funds that write 100, 200, 500, 500K checks, as you know. So we co-invest with a lot of the early stage funds, or even the lot of the blue-blooded Series A funds, right? So as you know, all the big Silicon Valley majors now do write very early stage checks in India, as little as $500,000 at seed stage. So we like to, we actually like to have runway of capital. We like to give more capital to the entrepreneur to begin with, because you then have the ability to try and fail or succeed in your early attempts and reach some critical mass that gets you ready for for larger competition, or lets you accelerate your entire entire product execution. So that's where our head is at, at this point in time.
But in terms of market maturity, I mean, if you talk about Myntra in the early days, it was not, I mean, in principle, sure, apparel was eventually going to get sold on the internet, but it was early, right? When you invested in Myntra, it was early. If there are other markets currently that have that dynamic, the mass healthcare, consumer healthcare market has that dynamic. A lot of fintech has that dynamic where you may have little bits and pieces of proof points conceptually. It makes sense. It's a concept arbitrage perhaps from a concept that is working in the US or somewhere else. But it may not have complete market proof points. Does your pre-Series A investment comfort zone include ventures that have that kind of market immaturity?
Yes, we are not, we're not averse to entering businesses at early stage at this point in time as well. You're absolutely right. Healthcare is an area of expertise that we have in the family office, and we do look at early stage businesses in areas like that, which are in the ecosystem of maturity at a much earlier stage. Having said that, I think there is, because there is more capital available to deploy, because the product market fit is something that can be very, very quickly and very rapidly developed and set in today's market, because entrepreneurs are today either second generation or second life cycle, and therefore coming into us, having assessed the market, having tried something with their own money or family and friends' money, we do believe that if you just look at sort of the funnel that is out there, you have tens of thousands of new companies in India that are being born today. Less than 1%, of course, as get angel funding, and then less than 1% of that go into venture capital. So we're simply making sure that that we are able to pick up companies that at least have their foundation risk out.
Yeah. The question, that I think about when I think about India and the next generation of companies is the velocity question. Traditionally, VCs have wanted to go from $0 to $100 million in 5 to 7 years. And that's not necessarily the velocity at which companies grow in India. Can you comment on that?
Yes, absolutely. You're right. So India essentially has a velocity of consumer adoption. So you will see companies go in 5 years, like you said, very, very quickly, and even sooner than that and shorter than that, into what I call consumer adoption, but not necessarily, paid adoption. So you are seeing 100 million consumers, which is something by itself to write home about, given the size of the country that we're at, and the size of, people on the web. Which is commendable. So we're seeing a lot of that happening, people engaging with either connectivity, content, commerce, but you're not necessarily seeing, like you rightly said, the revenue translation for the businesses to $100 million. That, of course, to my mind is a clear also indication of the size of the Indian market in terms of what the economy is relative to the U.S. economy. You can't use exactly the same metrics, right? Neither do you see that in the startup valuations, for that matter, right? Whether you see the number of unicorns coming out of India versus the U.S. or China, so you don't see that in the late stage valuations, nor do you therefore see that in the trajectory of revenue growth. So it takes a little while for Indian companies to be able to monetize their consumer traction, into revenues, both from a a margin on GMV perspective. If we look at sort of the e-commerce industry, because there is gross margins in this country itself are, slightly low. It's highly competitive, compared to other markets. And on top of that, India is actually a country of sort of 27 different states, 5,000 different cities. So there is a lot of execution, that you need to build out to leverage economies of scale. So when you get to scale, that is when you suddenly start turning on both the revenue and the profitability engine.
Yeah. So what have you invested in from Pivot Ventures that is interesting and worth discussing? Can we do maybe a couple of case studies?
Sure. So, in Pivot Ventures, we like sort of three different themes. We like the domestic consumption story. We like the entire mobile data and app growth story, which Jio has in fact catalyzed over the last couple of years and has completely changed the face of digital India. And the third thing we like is actually the ability to leverage Indian talent to build out global products, services, and businesses out of the country. In those areas, let me actually specifically just give you a couple of recent examples in the consumption space. One company that I've invested in is a pharmacy retail chain called Wellness Forever, which is a large regional play in India with over 100 stores. And going after a highly underpenetrated and unorganized market in this country. Right? Healthcare is, of course, a bellwether business in that sense. Pharma retail is growing significantly. As you know, a lot of generic drugs are also manufactured in India for the world market. It is extremely cost effective to buy these drugs in India, and there's of course a large population growth as well as young and aging population that needs this. So what's interesting is there are over several million unorganized mom and pop pharma chains across the country. So there was a clear opportunity for a modern retailer to come in, standardize the products and services. And I'm glad to say that this is one of those companies which is in that $100 million range, which has scaled very, very rapidly over the last 5 years. And that's one of our investments. Another investment I talk about is a cloud kitchen. So it's a company called InnerChef, run by someone whom I know again for the last 10, 15 years, a very seasoned entrepreneur as well as investor himself. That company essentially, rode on the wave of essentially logistics and delivery coming of age in India, which was originally designed for the e-commerce ecosystem. But as you know, food delivery is becoming very large across the world. Of course, from grocery with the Instacarts of the US, right, to actual ready food delivery. And a lot of marketplaces have come up in India, and InnerChef is one of those kitchens that has created over 25 sort of dark stores across India today. Has also diversified into local fast food cafes because a lot of young millennials today are eating 20, 30 meals a month outside of their homes, which is a huge shift in consumer behavior across the country. And they finally also diversified into healthy food bars because there is another section of the population which is sort of our vintage and demographic, if you will, that now beginning to care a lot about healthy food and everything from veganism to to keto diets. This is where there is a play in that space. So these are two interesting examples of how we're looking at our investments in the India market, and has had sort of 20x growth in the last less than the last 5 years that we've made these investments in.
Because my last question, I know you have to run, so my last question is actually about the Jio led data explosion that is happening in India, is there a large developer network of entrepreneurs who are developing on top of the Jio platform and building apps on top of that data?
Yes, absolutely. I think that there is there's a very heightened understanding of the opportunity that lies ahead of digital India. We're still scratching sort of the tip of the iceberg. You just have the foundation layer in India. You've seen India, data consumption as a country grow from being 155th in the world to being number one in the world today, which means that hundreds of millions of consumers, have come on and experienced data for the first time in the country, and therefore, you now have an opportunity to build value-added products and services on top of that ecosystem. So there is clearly a developer community that recognizes that. It's coupled with the fact that you have, such great, readily available tools and technologies that you can use, the big hubs of the world and all of that, to quickly string together, apps, for end consumer or even B2B purposes. So, at Jio, we regularly run hackathons for people to go out and build apps. It is being done by almost every accelerator, as well as early stage fund in India that goes out and does this. So the combination of the maturity of the development life cycle, of the software world being brought down, by what's available out there, as well as now a consumer who's very willing to experiment with a new product or service, has given birth to a lot of early stage young developers that are building apps by the dozen.
What is a lot of? How many entrepreneurs are building on the Jio data platform, you think?
So the Jio data platform, has two aspects of it. A large part of our platform is the smartphone ecosystem, which is again in hundreds of millions, as you know, in the country, right? We have over 500 million smartphones in this country. We have over 500 million feature phones in this country. So we straddle both on the smartphone side. It's classic Android and iOS development, right? Android, of course, is 95% of the market, so that's where the bulk of the development is. And we also have a separate feature phone platform that Jio owns, which is called iOS for specifically the Jio phone. And that's an app store that we control. And again, we have hundreds of apps out there already, hundreds of apps in the pipeline that goes after mass market India. So the number is large. The number is in hundreds of entrepreneurs that are working on both those systems to develop apps, for the.
And have you funded anything from that pool?
Sorry?
Have you funded anything from that pool? Entrepreneurs who are developing on the Jio App Store? No, that is not something that I would actually do, because that would be sort of conflict of interest. So that's something that would be Jio's prerogative. All right. Very good. Vikas, is there anything that you want to add to this conversation before we wrap up? I know you have to go.
Sure. No, I think there is, I for one am extremely optimistic about where the Indian economy is heading, the growth that lies ahead of us, the non-linear sort of adoption of digital products and services in the country, and a lot more money coming into both the investing side of the ecosystem. Right, India has become one of the hottest markets today, almost upstaging China in the amount of capital that's coming into the country, and at the same time, the opening up of the consumer wallet in terms of what they're willing to spend, for more convenience or for value-added products and services. So I think there are, I think in the next 5 years, you'll see tens of more unicorns coming out of the country. You'll see tens of more Flipkarts, coming out of large exits in the country, and you'll see hundreds of brands that are built, both digital as well as consumer products, that will that will sort of leapfrog what's going on in the market. And I think we are all here to sort of support the growth of that that rise in the economy.
Fantastic. Thank you, Vikas, for participating today. We will continue the conversation later offline and hopefully look at deals together.
Thanks so much for having me.